Hi, hello, and welcome to the Business and Banking Dialogue Show, your daily one-stop show for the best of topics of the financial world and subject matter experts that we bring to you every day. Uh, we are live, as you know, across CPS channels, YouTube, Facebook, Twitter, and LinkedIn. Thank you for your participation in today's show. I'm KK, your host and moderator for today's show. You can view our earlier shows if you wish to. Please visit our site www.electronicpay.in. In that in the website, you'll find a BBD page, that is Business and Banking Dialogue page. You can click and watch our earlier almost 80 shows that are available out there. You can also view our current and previous shows in YouTube. So go to YouTube and you can see many of our shows. And when you are in YouTube, don't forget to give your thumbs up in the YouTube icon. So today, to discuss the growth imperatives of banks post the pandemic, we have with us Mr. Kishor Kharat. He is an acclaimed banker with over 40 years of experience in India and abroad, including UAE and the West Indies. Right in front of you, you have his profile. So do read it. I'm just reading a synopsis of that. He was the MD and CEO of Indian Bank, and within a very short span of 16 months, guided the bank to India's number one bank. Indeed, a great work to do that, especially in a PSU bank. Immediately before Indian Bank, Mr. Karath was the MD and CEO of IDBI Bank, the bank which was slightly reduced with the acquisition of LIC's 51%. He was also the chairman of IDBI Capital Markets and Securities Limited and held various chairmanship and director positions in asset management and life insurance of various banking companies in India and abroad. So, ladies and gentlemen, sorry, the entire financial services sector has come to an inflection point with COVID-19 now complicating what was already a powder keg of regulatory pressure and ineffective manual processes. Financial institutions are looking for ways to boost efficiencies and also cut cost. In a new era of financial services, it's imperative that banks and other financial institutions would reboot and rethink strategies in the post-COVID world. Ladies and gentlemen, please join me in welcoming Mr. Karath to today's business and banking dialogue. Good afternoon, sir.
Good afternoon, Mr. Krishna Kumar.
How are you, sir? All well?
Fine, thank you. Yeah, all well.
Excellent, sir. Thank you. So thank you for coming to our show. Before I dive into this subject, may I bring to my notice of my participants that in view of this changing situation in terms of the COVID, offices and are opening up, and so we thought we had a poll survey done, and we felt that we should shift our timing from 3 o'clock to 6 o'clock in the evening, which will start from the 1st of September. So for this month, it will be at our regular time from 3 to 4 p.m. IST. From 1st of September, we will make it from 6 p.m. to 7 p.m. We hope that by then we would have many more people who are unable to watch our programs, because the 3 o'clock, 4 o'clock is the time when they are in the office. They can watch us after the office or on their way home or at home during this in the evening. So we'll try that out and let you know in case there's any other change. So, what is the impact of the pandemic on the Indian banking sector, and what is the level of preparedness for the banks to survive and grow?
Okay, good. First of all, thank you very much, Mr. Krishna Kumar and EPS for, in fact, inviting me for the second time on your this show. Last
Sure.
time also exactly after 1 month I'm appearing here today. And today's topic is also more or less on the similar lines. Uh, you asked me about what is the impact of pandemic on the banking and what is the preparedness for survival and to grow further, right?
Yeah, yeah,
Now, let me tell you, all businesses actually are adversely affected, and not only in India, they have been affected worldwide. And therefore, the banking also was not immune from that impact, and banking is also impacted. In fact, in India, banking has been considered as essential services. And because it is actually coming under the essential services, during the pandemic time, when all businesses were closed down, most of the government offices were also working on a minimum staff strength. The banks were actually working on the full strength, and banks were giving their services uninterrupted to all the public. All the bank branches were open, bank offices were open. And at the beginning of the show itself, I once again would like to congratulate all my fellow bankers for
yeah,
their tremendous contributions during this pandemic. They were actually the what normally they are saying the fighters for this. So apart from that, if you look at it, the banking actually, as I said, has got impact, and it has impacted on the banking business. Everybody talks about only about the stress which is bulging in the economy, and that has actually impacted the banking. That, of course, has impacted. But today, if you look at in the banking and finance sector, there is a huge amount of liquidity generated, and that liquidity actually generated because there is a lot of deposits are actually growing much faster, and there is no credit uptake. There is no deployment of credit almost now, and this was actually prior to pandemic also. Our credit growth had slowed down. After pandemic, in fact, once businesses were closed, there is absolutely no credit deployment. There is no credit growth, except in last month when it started. That I can talk later on. So because there is no credit growth and there is only the deposit growth, the earnings of the banks are impacted. The interest payable is actually continuing, whereas interest earning of the bank has shrunk to great extent. That has impacted the bottom line of the banks. Because of the stress, the NPAs are actually staring at the banks. Proactively, Reserve Bank of India had started has offered moratorium for all the borrowers. First, it was offered for 3 months, then subsequently again it got extended by another 3 months. And that moratorium is going to get over within the next 2-3 days. By 31st August, the moratorium will get over. And in the interim, Reserve Bank of India also has come out with the resolution mechanism, COVID impacted stress resolution mechanism, and that also will kick in thereafter. So hopefully the amount of NPAs, what was bothering earlier, that impact will get a little reduced. But definitely there is going to be increase in the NPAs also. Because of increase in NPAs, again provisioning will be there. That provisioning will again start impacting the bottom line, which already, as I told you, it is becoming weak. And therefore, the requirement of capital of the bank also is going to increase. So these are grossly some of the impacts which are there on the financial side and the business of the bank. Uh, we are all looking forward that the banks, the economy should open, and thereafter, as other businesses will settle down, banking business also will start improving slowly. Insofar as preparedness is concerned, as I said, Reserve Bank of India has been actually taking proactive steps to see that banking sector, banking and finance sector keeps on continuously supporting this economic slowdown. Yesterday, our Reserve Bank of India governor mentioned something about banks' risk awareness, and he has mentioned that banks are overly risk averse, and it will start rather impacting very adversely, not only for the development of the country's economy, but also on the in his words, he said something about on their earning of their own bread. Also, it will impact. So that is the reality what our governor was expressing. And therefore, when we talk about this preparedness for growth, so one thing we need to understand that all these issues which are actually impacting adversely to the banks that need to be addressed first. The excess liquidity which is there with the banks that needs to be actually used for deployment towards the credit. There will be a good amount of uh, need actually. I am surprised that some of the comments which I hear or which I read in the newspaper that there is no demand for credit. I think we need to relook into these statements that in this particular situation, actually, uh, there will not be a situation where there is no demand for credit. The demand will certainly be there, and bankers will have to start actually supporting their own customers, pushing the credit in the market.
Yeah.
NPAs need to be controlled. And while we are talking about the NPAs need to be controlled, obviously the Reserve Bank of India, as I said, proactively has given some of the measures. The resolution plan, which has been initiated by Reserve Bank of India, that can be used by all the banks. Again, there are certain observations about Reserve Bank of India, this plan that it is only for the COVID-19 impacted businesses. This plan will be eligible. But at the same time, RBI governor has very clearly mentioned that uh, all other businesses which were impacted prior to COVID-19, those can be actually addressed under the Reserve Bank of India circular, which was issued on 7th of June 2009. So there are certain important steps already taken by the regulator. Now it's the time for the banks to actually proactively start coming back into business. Um, Lending is actually very much important. That is, when we talk about this imperatives of the growth, without lending, banks cannot grow. And therefore, commencement of lending has to be there, and that should be on the priority. I understand that, okay, post-COVID, certain sectors, we need to identify certain sectors which will need the credit, but then uh, there are quite a few sectors which are doing well post-pandemic, which will be doing well. There will be some sunrise sectors like healthcare, renewable energies, even rural India, particularly if we focus on rural India, rural industries, there is a lot of demand is going to be there. Food processing units are there. There are a lot of startups which are actually looking for, and there are technology-based startups which can actually bring a lot of synergy in the businesses. So there are, it's not that there is no scope for the bankers for lending. Existing lenders also will need, and that if you have any questions on that, we can definitely discuss on how the existing lenders, existing borrowers are also in need of this banking service. So in my opinion, uh, Reserve Bank of India as well as the government of India has uh, done their bit of, they have played their bit of role, and now it is for the banking and finance sector, they have to respond positively towards and position themselves very well, not only for bringing this economy out of this depression, but also support it for the growth. Thank you.
So, thank you. You touched upon demand, and that there is enough liquidity, and that there is that the banks should start lending. You think
Yeah.
there is this kind of a little bit of a risk aversion because unless there is you can't be extremely risk aversion, and you have to strike a balance between realistic and unrealistic risk. You think there has to be some kind of some way that banks have to walk that path and make it less risk aversion?
Yes, that is very much essential because today, if you look at the credit growth, because the risk aversion from where you can gauge it,
Mm.
the credit growth, as last time I had some statement of governor, he has said the credit growth will come near to zero. So
Yeah.
that kind of situation is not going to help any economy, any businesses also. And in general, also when we get the feedback from the business community, we always see that they are saying that bankers actually are not lending. Bankers are not taking decisions to lend and to support. And delay in decision making also many times creates adversities insofar as businesses are concerned. So at least for the customers which are there with you for a long time, check their track records, right? This is a very unprecedented time which are going through. So this time should not be taken to actually assess the credibility of the customers. The credibility of the customers can be assessed from his track record, which is there with you. For a long time, customer must be banking with you. How was his track record? What is his business line? What are the prospects for the business line in future? So all these things can be taken into account. At least if we start even supporting the existing customers, that also is
Mhm.
going to help to great extent. But uh, this awareness, which is actually seen, and in fact, our Prime Minister of India, if I'm not wrong, at least 2 to 3 times, he has appealed all the bankers that you take the decisions and your genuine decisions will be protected. Don't have any fear about taking decisions. The finance minister also has appealed. Yesterday, governor also has appealed that too much of risk awareness is not good for the country, not good for the economy, not good for the health of the banks also. And that's we also can see that
Yeah,
because banking is actually a business where we are supposed to take risks. If we don't take risks, then banks will not have business.
correct. True. Thank you, sir. Thank you very much for that interjection question I had. How would you project potential future scenarios for Indian banks, which will enable them to stay focused on the agenda of resilience and growth, assuming that we have this period of uncertainty. This will go away after some time. So after this, how do you think that the banks, which will enable them to stay focused on the agenda of growth?
Uh, yeah, one thing which I notice and many of common public which is actually facing is there is a lot of uncertainty in so far as their financial affairs are concerned, in so far as their future is concerned.
Yeah.
People are worried even about their on their health issues also. When we step
Mhm.
out of the house, a kind of fear is always hanging on our head. So under this situation again, when we look at the economic situation, people are feeling a little kind of hopeless also. So
Yeah.
in this situation, uh, I again say that the banking and finance sector can actually change that mood of people, that hopelessness, which is actually uncertainty, which is bothering people, that can be addressed very well because banking again is a business of relationship.
Yeah.
And when there are strong relationship with the customer definitely feel that kind of comfort from the bank. During this pandemic time, when everybody is worried about the businesses, even existence of businesses also at stake. Many businesses we are seeing they are closing down. And during the same time, when there are a lot of rather information coming about the stress of the banks also, that also creates some kind of fear in the minds of customers, in the mind of people at large, that what is going to happen. So therefore, today what I observe is everybody, not only the borrowers but the depositors, are also looking at the banking sector with a great amount of faith, and they feel that banking sector should survive first. Because if the banking sector is survived, obviously it is going to it is going to support the future of all these people.
Yeah.
So when
Correct.
we talk about the resilience and growth of our particular economy, when it is looked from the banking angle, KKG, Indian economy is a very peculiar economy because
Yeah.
Indian economy is fully supported by banking and finance. Because
Yes.
last time also on your channel, I said that our country is actually always starving for the capital. The
Mm.
capital formation in our country itself is very low, and therefore most of the businesses and most of the economic activities are continued on support of the banking uh, loans particularly.
Yeah.
And when
Mm.
there are loans people are taking on for growing their business, obviously there will be certain problems in their businesses, but bank support, continued support is required. Secondly, in our country, because during my junior days, I used to work in the financial inclusion department also. And I have seen that in our country, there is still lot of unbanked areas, even though we must have opened account under Pradhan Mantri Jan Dhan Yojana for all people. But that is only given access to the banking sector for all those people who were not having access. But still, geographically also, there is a lot of unbanked area. Still, in our economy, if you see, there is a lot of unorganized sector, which is
Yeah.
not actually supported by the banking and organized banking sector. So I feel to strengthen and bring that resilience, first of all, we need to continue to increase our banking network and take the banking to the unbanked areas, create the perfect banking network so that people who are not today in the organized sector, organized banking sector, they can first be brought into the banking organized sector. Even today, our country needs a mass banking rather than the class banking. There is still time for us to move on the class banking. And therefore, once we look at these masses, once we cover these masses under the banking channels, mainstream
Yeah.
banking channels, I think slowly there will be a resilience which can be built in our system. Then if you look at the tiny businesses, small MSME businesses, uh, they need a lot of support from the bank. Even today, when I talk to MSME people, in fact, I held many webinars for MSME clients, MSME borrowers, and what actually comes out is many of the MSME borrowers even today are not getting support from the banking channel. There may be reasons that the bankability or the proposals which banks are looking at, those may not be fitting into criteria. And therefore, they go to unorganized sector, they go to NBFCs, they go to MFIs, and many of them go even today to private lending. Now, when they use non-banking channels, obviously it's a little more cost to them. And when you are having cost, your costs are increasing due to interest and all, obviously it will not have sustainability for your business.
Yeah.
When you talk about resilience and when you talk about the growth, one need to first address these issues. At what cost your capital is coming, what cost your funds are coming, and what is the consistency of getting the funds. So once these people are brought under the formal banking system, in my opinion, these issues will be addressed, and that will automatically create the platform of that resilient platform for them to grow thereafter. So therefore, I feel uh, we need to look into expansion of these banking facilities to all these areas. But in the interim, last time also, KK, if you remember, we had discussed that how banks and NBFCs can work together insofar as
Yes.
covering
Yes.
those people are concerned. I
Yes.
feel
Correct.
banks and NBFCs, banks and MFIs all can actually work in complementary role to each other. Banks can start on lending to NBFCs. Unfortunately, NBFCs today are suffering very much. Their funding support is practically dried up, and they are not in a position to actually on lend. Banks are having rather good amount of liquidity, excess liquidity is lying in the banks. And another side, NBFCs are actually starving for the funds. Now, this
Mm.
paradox we need to actually address. We
Yes.
banks can actually start supporting the NBFCs for on lending, and in turn, NBFCs also can actually again securitize their good portfolio with the banks, and they can again get the funds. Bank this way can get a good portfolio in their lending books. MFIs, which are actually right in the hinterlands, they go. The reach of the MFI is one of the deepest as compared to NBFCs and bankers. They are the much closer to the customers which are not in the mainstream bank. So MFIs, suppose if I look at MFIs as my extended arms, and suppose if we bring them as a banking correspondent of the banks, I think there can be some models we can work out. But basically, what I want to know, what I want to emphasize here, that if we want to really bring that resilience which is required, we need to
Yeah.
create that network of this banking facility amongst all nook and corners.
Thank you. That was good explanation. So thank you so much. I'm sure participants like that. So, ladies and gentlemen, I continue to have discussion with Mr. Kharat. Meanwhile, you can ask your questions by putting in the Q&A box. And if you want to ask a question directly to him, you can ask the question directly. Please note our topic for today is growth imperatives for banks in post-pandemic world. So if your questions are around the subject, it's good. Let's not deviate too much from our topic of discussion. So while I was appealing to or talking to our participants, I already have one query for you, sir,
Yeah.
Mr. Karat. Um, so this has come from Peter, and no name is given. So it says government interested in business, not people, says Supreme Court as center stays mum on the issue of moratorium. Which is like you said, it's going to end now. So uh, what's your view on this point? If you would like to address that, otherwise
No,
it's fine.
I think this what issue he is pointing towards, Mr. Peter, is about
Yeah.
the case which is actually being heard in the Supreme Court about the
Yes.
interest on interest during this
Okay.
moratorium period. If I'm not
Okay.
wrong, I don't have much details about that case, but whatever I read
Okay.
in the newspaper, it is about
Mhm.
interest on interest, and Supreme Court has actually asked the Reserve central government to uh, give their position about what is this. But then
Mhm.
Reserve Bank of India feels that if this kind of uh, rather ruling is given that no interest should be paid interest on interest, it may create a different precedents wherein it will impact the earnings of the banks. So let us wait for that Supreme Court. Let us not say who is in favor of what, because
Sure. Sure.
ultimately civil issue is a sub judice. We should not comment
Okay.
outside on that. But obviously, there will be some reasonable outcome will come. The issue was flagged to Supreme Court only because the on one side the businesses were closed down and there were no earnings. The Reserve Bank of India had given moratorium, but that moratorium was only for deferment of EMIs. And because there is a deferment of EMIs, the loan is actually in the books of the bank. So when the loan is outstanding in the books of the bank, naturally there will be interest also generated. Interest will be applied on that outstanding. So it was objected that during that time interest should not be applied. So let's wait what actually Supreme Court gives the decision, and thereafter it will
Sure.
be actually binding on all of us.
Sure. Uh, I have a question coming to you directly. The gentleman, Mr. TK Srivastava, he would like to ask a question directly. Mr. Srivastava, please unmute yourself, introduce yourself, and ask the question.
Yeah, I'm here. Good afternoon, Mr. Kharat.
Good afternoon.
I was your colleague in Syndicate Bank, working as
Yes,
executive director.
I thought so that you must be Mr. T. Kishor from Syndicate Bank.
Sir,
Yes, sir.
just a thought to me, this retail loans will be
Right.
an issue. And this is directly related to the demand creation in the housing, in the automobile, and lot of utility sector. And you are very familiar with the public sector people. They judge the earning capacity and whatever means of earning you have. So going by this, particularly this environment where people are getting their salary cuts and maybe husband wife working together, and then wife loses the job, husband is left, a lot of pressure will come on the retail financing, that how to do that. Can you suggest some innovative method, or what thoughts comes to you, what a banker at the level of branch or what at the level of corporate office should have the policies where the banks finance more on the retail sector?
Good. Thank you, Shreya Soji.
Yeah.
In fact, wonderful. In fact, both of us were contemporaries in a banking, and
Yes, sir.
we were fortunate that we were not having this kind of challenging time during our time. But
Right, sir.
considering this present situation, what is happening there is definitely a great amount of adverse impact on retail portfolio of the banks, because as you rightly said, people are actually many of them are losing jobs, many of them are actually losing rather facing their salary cuts also. Some companies have cut 30%, 40% salaries. So repayment obligations are actually becoming a burden for those individuals. But during this time, what I will suggest or what I presume people would be doing is they will have a pause insofar as going for new acquisition of assets are concerned. As it is, we must have seen that housing sector, there is almost no sale was happening during last 6 months. Now also slightly the sale has started picking up. The automobile sector also was going through a tremendous slowdown. Just to give fillip to both these, I think the government is also thinking of reducing a lot of taxations. In Maharashtra, the government of Maharashtra has already day before yesterday reduced the registration fees from 5% to 2% up to December, and thereafter up to 31st March, I think it is 3%. So every incentive is coming just to give a boost to these sectors because you know it's a vicious cycle, like, because these sectors also need to pick off for the economic development of our country, and at the same time the consumers of these sectors, they also should be in a position to actually acquire those assets. So I think within we all are actually hopefully looking forward towards uh, normalization of the situation. The government has systematically opened up the economy. Today, almost all the sectors are open, of course, with some kind of restrictions like social distancing, and in some offices there is still restriction on full capacity operations and all. But I think slowly, people will be rather economy once it is opened up, people will start getting their jobs back. People will start getting restored their salary cuts also. So once they are back in a proper shape, or once they are back in the pre-pandemic situation, I think thereafter people will start acquiring, and banks also need to give a pause little bit till everything is normalized. The existing portfolio which is having a stress, as Reserve Bank of India has really, been monitoring that. They have given uh, that moratorium for 6 months. Moratorium is getting over now, so restructuring has to be actually kicked off. Uh, Reserve Bank of India has again appealed all the banks not to wait even for the KV Kamath committee report or suggestions, and
Right.
start looking into the portfolios wherever required. Immediately, bank need to give the restructuring. Srivastava Saab, you must have
Yeah,
noticed that
yeah,
there is a gap between this 31st August and 31st December, by when banks are expected to actually consider
that's
the restructuring proposal. Again, the
right.
implementation of restructuring proposal period is another 6 months. So
Right.
if you are exposed to uncertainties after 31st August, and if your account is not restructured well in time,
Mm-hmm.
then slightly there is going to be an issue for the borrower also and bank.
Right, sir.
Thank
Well
you.
answered, sir. Thank you.
Thank you. So thank you, Mr. Srivastava, and then thank you, Mr. Karat. So there you see, ladies and gentlemen, while we are disseminating a lot of information to all of you on every day on some topic or other, it also brings to a point that we are able to reconnect people, right? In this case, Mr. T.K. Srivastava, ex-ED of Syndicate Bank, has been able to reconnect with Mr. Karat after I don't know how many months or years. So
Yes.
it's a great feel. It's a great feeling that we have that EPS has been able to reconnect both of you for a short while, but it's a joy. Thank you so much for asking that question. May I request the second question coming to you from Mr. Pushpendra Khandelwal.
Yes.
Mr. Khandelwal, please unmute yourself, introduce and ask the question.
Uh, Good afternoon, Kharat sir.
Good afternoon. Good afternoon, Khandelwalji.
Sir, it is again chance to meet with you. Sir, my question is, it will be imperative for banks to expand their balance sheet and simultaneously revive credit offtake rather than focusing only on asset quality. This is
Right.
imperative. But same time, RBI said that NPA ratio of all banks may increase from 8.5 to 12.5% in March 2021, or it may go up to 14.7. Sir,
Yes.
what's your views on this issue?
Yeah, in fact, Reserve Bank of India's estimation was that at a baseline scenario, the NPA may go up to 12.5%, and Worst case scenario, it will go to 14.7. But considering this restructuring package or restructuring this stress resolution scheme which Reserve Bank of India has already initiated, I think it will not escalate beyond 12.5% because most of the accounts, once they are restructured, obviously for the next 2 years, that is actually that scheme will start coming in effect from, of course, it depends on account to account, but last account, let us say if it is restructured on 30th of June 2021. From there, after 2 years, that means somewhere around up to June 23, we can say this NPAs can be actually can be avoided. I will say these accounts, because they are under, as far as they are under restructuring, they should not fall into the trap of NPA. Of course, this is again provided this pandemic situation improves and economic activity also actually are coming to normal. So this is the estimation of the Reserve Bank of India on one side. On the other side, what is worrying is these days people have started talking about what is the GDP growth going to be of our country. Even some of the famous economists and some of the rather, I will say, eminent economists have started talking about our GDP growth. Anyway, and it is going to be negative. That much, at least, everybody is agreeing that it is not going to be a positive. It is going to be negative. The extent of negative growth is actually varying from minus 5% to minus almost 16%. And that is what is worrying. If our GDP growth goes to minus, let us say, in double digit, that will have a little long-term impact for recovery of our economy. At least it will then delay.
Yeah.
So if the economy is delayed and this Reserve Bank of India's package is already in place, let us say it is already under implementation and still economic recovery is not coming, then perhaps there will be pressure so far as stress in the concern. And if that stress is not controllable, obviously it will amount to increase in the NPA.
Thank you, sir.
Okay.
Well answered.
Thank you, Mr. Khandelwal. So I have a question to you from Mr. K.K. Gupta, again on moratorium, maybe a little off our topic, but it's a hot topic, so let's take it up.
Yeah.
Moratorium period for interest on term loan in respect of large borrower accounts will be over by this month end, which is what you said. And
Yes.
you said that NPA may go up, bottom line may shrink, and capital requirement may also go up. That's what you said.
Yes.
So his question, Mr. Gupta's question is, how to deal with such a situation?
Yes, that's actually going to be a critical issue for all the bankers and the borrowers also. And therefore, the proactiveness of the bankers and borrowers, that is only going to help us. Even though the timelines are up to 31st December, banks need to actually consider the restructuring package. We need not to wait till 31st December. Actually, the time it has declared, because there are, in particular in the smaller exposures, let us say, I will say up to 200 to 50 crore exposures, we don't have to wait for the committee which is formed under the eminent banker, Mr. K.V. Kaman. We did not wait for that. Again, Reserve Bank of India has very clearly said that exposures where it is more than 1,500 crores, there will be some external weighting insofar as those credit evaluations are concerned. So those things will happen for the larger exposures. But our medium MSME exposures, our smaller exposures, particularly exposures up to 100 crore, those can be actually immediately considered by the banks on their own by contacting the customer. Borrower also should not wait for the bank to actually invite them or bank to give or declare some schemes. They should go and sit in front of bank, their own bankers, and start actually explaining their situations based on whatever information, whatever data, and the situation of the particular unit is concerned. Banks will start actually restructuring these. But if that is not done, then as I said, 31st August, if moratorium period is over, and if my restructuring is not in place, then I am exposed to it. And as a banker also, this is a risky proposition because then account will slowly start moving. Forget about slowly, because after this moratorium is over, we have not yet addressed that issue, that what happened to that particular amount which is actually postponed for the repayment. And that amount is already ballooned and it is standing there in the books of the borrowers. If that is not addressed, that means the account will very quickly go into SMA 1, SMA 2, and very quickly it will actually slip into NPA category. So therefore, it is very much pertinent to address this restructuring immediately. In my opinion, there should have been a little bit of extension of moratorium till we work on this restructuring packages. Otherwise, in the absence of any actions from bankers and borrowers, I think if moratorium is not there, the entire amount which was postponed for repayment, that will become due, and obviously it is not possible for any borrower to pay that amount which is already borrowed, and that will be a great amount of default, causing account to flip between NPA.
Okay, thank you, Mr. Gupta ji. Well, extension of moratorium was also one topic that had evoked great response, and that was not something that one of our subject matter experts said which is not extended at all. He had his own justification. So anyway,
No, it was, I am saying it was what I was saying, that no formal extension, but till the account restructuring is put in place. So that extension will be account to account. It will not be a general extension.
Okay, got it.
Yeah.
So, ladies and gentlemen, I've been getting very good questions. So please do put your questions. It's an opportunity to talk to one of the most experienced banker of India, and you can put in your questions in the QA box, or you can ask the question directly. So let's look at the future, the forward thinking. Okay.
Yeah.
What kind of changes do you see in the operating models of the banks in critical functions of both the retail and the corporate banking?
Okay, as Mr. Srivastava already actually had flagged this issue about the retail banking, but still I will say that post-pandemic, because this pandemic has actually given us a lot of lessons, I can say, and this is unprecedented lesson, unprecedented situation. We had never imagined, never even studied in our classrooms that how to deal with this situation. So, having exposed to this situation today, most of the banks, and retail particularly, is a very critical area to handle, because this directly actually relates with the individuals, and of course corporate banking also needs a proper look. But when we talk about the retail, what I feel is, during this pandemic again, the eligibility criteria, the credit assessment systems, those need to be again reviewed by all the banks, because earlier eligibility criteria were different. Today, the individuals' own situation is changed. Many of them have lost their jobs. Many of them have actually got reduced their earnings. Many of them have actually moved from their own places. There is a dislocation. So all these issues will actually come on the shore. Bankers will have to relook into these criteria. There will have to be a very close monitoring insofar as borrowers are concerned, because earlier we were, let us say, earlier also monitoring was there, but now the monitoring will have to be very thorough monitoring, critical monitoring. These days, people talk a lot about artificial intelligence and the behavioral patterns of their account, behavioral patterns of their transactions. The technology also can be used for recovery of their loans. Let's say, suppose if we are in a position to recover the loans at source itself, and may not be on a monthly basis. Suppose if it is in a piecemeal also, those kind of things also should be looked into, whether I can recover, not wait till month end, but wherever the borrower is getting money, whether I am in a position to get at source some deductions. And technology, with technological environment, it is still possible to do that. So insofar as retail is concerned, I think these kind of changes will be there. Insofar as corporates are concerned, again the same issues, because you will have to now see, okay, in which field this, at least for the next 1 or 2 years, we'll have to be very careful about sectors in which we are lending, because there are going to be, some sectors are going to be impacted very badly. They will take longer time to recover. Some sectors will recover much faster. Some sectors are not impacted at all. So when you are looking at the corporate lending, perhaps first of all, we'll have to look at the sectors in which you are lending. Then the discipline among the corporates that need to be ensured insofar as their cash flow is concerned. There will be a requirement of full control on the cash flows. All non-core investments, non-core activities of the borrowers need to be controlled. Non-core investments, suppose if there are anything, many times businesses do some non-core investments from the futuristic approach, but this is the time to bring all those investments back into businesses. So bankers will have to look into that, insist to the borrowers to get them back into business. Similarly, the large exposures, the surveillance has to be there. Recently, under Reserve Bank of India's guidelines, many banks have started actually appointing, what is that called, EMA or CSA, something, wherein the big exposures are actually monitored by external agencies. And there are certain agencies which are empaneled with the banks. So those kind of monitoring, those kind of surveillance has to be increased. Long-term exposures particularly should be avoided during this time. If there is a long-term exposure, there has to be some kind of a mechanism, inbuilt mechanism for refinancing that. So all those issues will come insofar as corporate lending is also concerned, because everything will change now. The credit assessment also will change.
Yes.
Right. But I think technology and this artificial intelligence, your market intelligence, your artificial intelligence, all those things, I think bank will have to put into use.
Yeah. So actually, there is a query exactly on that, on the artificial intelligence. It says the query is the move to digital channels and customer expectations of greater personalization have created a paradox where there is knowledge of the need for improved data and analytics, yet 75% of financial institutions, approximately, he says, consider themselves inept at basic applications of data analytics and artificial intelligence. Isn't it high time that banks seriously look at data analytics and artificial intelligence?
Yes, absolutely. Whosoever has asked this question, I must appreciate. He has very aptly noticed this. Most of the banks are having, let's say, even in core banking system, there are a lot of features. In core banking system, there is a CRM also, customer relationship management. Now, I have worked in almost 4 banks, and I used to see that CRM is not actually used to the extent what we can use it. Some of the private banks are using that CRM very well, but they are also not actually exploiting all the benefits of this technology. But if we are talking about the artificial intelligence, yes, obviously, that can be used, and banks will have to work towards that, getting those kind of technologies. Now, existing technology have become obsolete because they were all reactive technology. They are transactional based technologies we were using. But suppose if we want to, now the time has come wherein our proactive actions only are going to save us. So therefore, artificial intelligence like those kind of technologies, if they are available in the market, and if they are actually synchronizing well or complementing to our existing systems, bankers will have to adopt them very quickly. And this kind of linkages with even market intelligence. Let's say these days, everybody is actually using particularly the mobile apps for the payments. Now how my customer is using payment system, whether he is using UPI, whether he's making still cash payments and all, those can be actually tracked very well, customer behavioral patterns through artificial intelligence. And that is what is very much required when we are talking about the today's banking. Without this kind of advanced technologies, it will be very difficult to get going in this kind of critical situation.
Yeah, absolutely, sir. Thank you. So I have a audio question coming directly to you, none other than from Mr. V.G. Kannan, ex-chairman of IBA. Welcome, Mr. Kannan. Good afternoon to you. Can you please unmute yourself and ask the question?
Good afternoon, Mr. Kharat. How are you?
Fine. Thank you, Mr. Kannan.
Hope everyone is safe here. One small thing is, in the wake of our past experience, the last 10, 15 years in large term lending, would you think the bank should continue to do so in the absence of greater expertise in project financing? And should we look for term lending institutions as in the past? RBI floated a paper asking for suggestions, but nothing seems to have happened on this. And the banks not only have a asset liability mismatch, they also lack the real expertise in assessing projects. What is your take on this?
You're absolutely right, Mr. Karan. Actually, banks have, over a period, have lost their I will say, skill sets insofar as long-term project assessments are concerned, long-term lendings are concerned. And we used to have excellent development finance institutions in IDBI, ICICI, IFCI. All those development DFIs have been actually converted. Two of them have been converted into commercial banks. One is converted into NBFCs. But then after converting whatever their skill set were there, those were are not nurtured. Even ICICI Bank also changed their model from DFI more on the retail platform they went. IDBI Bank also they struggle a lot to keep that DFI as well as because they again introduce retail banking. So these skill sets are actually depleting in all the banks. On one side, we need those skill sets. On one side, we need those kind of long-term funding requirement is still in our country because our economy is a developing economy. It is not a developed economy. There are still projects which need lending from the bank, lending support from the bank. In the absence of those long-term uh, lenders, it's going to create that kind of asset mismatch, asset liability mismatch, what you rightly said. And if that is so, so there are two issues here. One is asset liability mismatch on the balance sheets of the bank. Others is capability of the bankers itself to assess the long-term projects or long-term lending proposals. So both need to be addressed. And unless that is addressed, I think we will keep on struggling on this project lending. And therefore, in between considering this issue, the large exposures, particularly in the project lending, where stress was getting developed. If you recollect, Mr. Karan, Reserve Bank of India had come out with this 5 by 25 scheme for all those exposures. And once that scheme also was withdrawn, I think today we are back to square one. There is no possibility of refinancing also, and you cannot hold long-term assets in your books for the want of that asset liability mismatch. So this needs to be addressed. Reserve Bank of India has rightly noticed that. Now, how these skill sets to be developed uh, for that is again $1 million question. Many times I feel people are still talking that we don't need DFIs. If you ask me, I may be a banker from the old school, but I still feel, and particularly after heading IDBI, I realize that there is actually a need of those kind of institutions for our.
May I continue?
Yes, please.
No, I think I'm very happy that you're also endorsing what I have been thinking. And I have been loudly speaking from the top that it's essential to have 2-3 DFIs, which is do sector agnostic. Right now, we have got DFIs only for power sector, but otherwise, we don't have anything. At the same time, now, you have also been saying that the bankers should lend. Uh, but I have a feeling that bankers are only intermediaries and should not be asked to lend just like that. Should always look for viable projects to come. So merely putting the blame on the bankers may not be the right thing. I think the enabling environment, both from the private sector and or the government sector, should be the one which has to be looked into rather than putting the focus on the bankers. Even today, I'm sure yesterday's discussions, none of the bankers said that they're averse. It was only talking
Prudent.
in the on the TV on the show. But I think they have also agreed that good projects like solar projects, like what do you call the gas projects, they have all been tied up. But in which case, I think the issue is a question of demand, good quality demand not coming up, rather than the bankers being totally averse. Yes, to some extent, because of the past experience, there could be. I still feel that the quality projects have to come up before the bankers can lend. Your views on this?
No, I agree with you. See, no one should squarely blame the bankers because you are also there in the banking industry for last 4 decades, and particularly the 7 decades post-independence, if you look at this country's development, I continue to say that the bankers have actually a lion's share in the development of this country. Without bankers, this country would not have developed to the stage what we are looking at today. So if the bankers have built this nation, and when the nation is actually collapsing today again because of this unprecedented pandemic, one more thing we need to again understand that because there is a no capital generation in our country, and most of the businesses are dependent on the banking credit support. In that scenario, if the credit support is not coming forward, then obviously these all the businesses will continue in this under the stress, and not only under this, they will become defunct. They will become a non-performing. Suppose if we are not at all lending, and if we keep on saying that no, there is a risk, there is a risk, how do we go about it? Let's say in the existing pandemic itself, most of the, let's say 50-60% of the units are actually looking forward for this banking support. If I say no, your credit assessment, what I had done, let's say somebody was having 100 crore turnover. Post pandemic, his turnover has come down to not even 50 crores. My working capital was as per the 100 crores. Today, as a banker, I will definitely say that you are not even eligible for 50 crores. You'll have to actually pay back as per the books. But then the reality is, if we support him during this time, because there is a hole which has got created because his money is lost, it has got wiped out. If that is not to be, if that is not replenished by the bankers, then he has no other avenues to go anywhere. And slowly, suppose if all the businesses start shutting down, is it going to help the country, the economy? So sometimes in the larger interest of the country's economy, because we can't afford to close down these businesses. We need these businesses to be supported. And one side, if we are having ample liquidity, and other side, if you wait for the only the good projects I can understand for the fresh lendings. But for the existing borrowers who are in need of money, now MSME, this government of India came out with this scheme to support the MSMEs up to 3 lakh crores. It was expected that by 15th or 20th of June, entire 3 lakh crore will be dispersed. Of course, many of the MSMEs are also not coming forward because they are saying when the businesses are closed down, what do I do with that loan? So loan disbursement is actually not picking up. But now when economy is reopening, and when the customers come to us for support, then we'll have to look at it from a new perspective. We should unlearn of some of our lending skills and adopt something that during this pandemic time, suppose if I have to bring this fellow out from his problems. So those rather things are expected from the bankers, that, and of course the entire ecosystem has to support that. The Reserve Bank of India has to support that. The government of India has to support that. Tomorrow, nobody should question when you were knowing that there is a stress in the account. Why did you lend? Now, those kind of investigative questions, if they start coming, then obviously bankers will not lend. So, whatever initiatives the bankers are taking for the revival of this economy, those initiatives will have to be protected by everyone, by the regulators, by the government also.
Thank you. Thank you, Mr. Kannan. Thank you, Mr. Kharat. One quick question is that talking about Gen Z is naturally digital. They have never lived without Google, Apple, Facebook, and Amazon. They are the mobile havens, as we call it, mavens. They will constitute about 50% of the population, approximately. What should banks do going forward for them?
No, in fact, banks very proactively started actually talking about this Gen X, we used to call it. What you are saying as Gen Z is we used to call it a Gen X. And we started already actually moving into alternate channels, and particularly the mobile banking came only because of this Gen X, if I am not wrong. Because even today, my old customers are not using the mobile banking. They still prefer to go to bank and do their transactions. So for Gen X, we have the banks have introduced mobile banking, bank have introduced the internet banking. Today, the Gen X, I know for sure many of the young boys and girls, they never visit their banks. Their employers, wherever they are giving the salaries, accounts and all, they all operate through different modes. They don't go to bank. And banks have kept on improving the technologies to support rather technology-based banking, which is actually the need from this generation. So I think if there is any more demand, banks will obviously introduce that also for them.
Yeah, thank you. So our topic on the what should be done, what are the growth imperatives. So we did talk about a few. So the post-pandemic world is different. So what kind of capabilities the bank should build to adapt and thrive? We already spoken about some in the many of the questions that came forward in terms of AI and artificial intelligence and data analytics, etc. Is there anything else that you would advise? Not to be very risk averse. That also you did mention. Is there anything else that you would want to tell the bankers?
No, one thing, it's obviously for the bankers also, for the regulators also.
Yeah.
What we are lacking today is whatever initiatives we take, whatever actions we take, or whatever systems we introduce, those are actually reactive to the situation. Let me put it this way, that prior to this pandemic, let's say there were certain events in the financial crisis. Let's say that American meltdown was there, that US crisis of 2008, or European crisis was there. What actually we learned, we have actually brought in lot of regulations. Every country brought a lot of regulations for strengthening the balance sheet, strengthening the monitoring and all. But we never brought any systems, or we never adopted anything with which we can actually proactively understand, okay, what is coming, right? So normally, let's say today, our weather forecast system also tells us, okay, on next week, 3 days, there is going to be heavy rain, or there are cyclone well in advance, we are getting these intimations. So those kind of systems, suppose if we are able to understand, and if we are able to build something, okay, these things are happening in the economy, we have to proactively catch those data, catch those information that something is bulging, something is going wrong in certain sectors. The regulator also will have to be very vigilant on those. Sector-wise vigilance has to be there. And earlier we used to have the selective credit controls. So sectoral vigilance when a regulator is doing and pressing the selective credit controls, I think we can build some guards for protecting the systemic risk in certain sectors. So those issues will have to be done. Of course, we have built in a lot of technology, a responsive technology. But again, we say that is a responsive technology, that responds to the situation. Here I'm saying that technology should anticipate what situation is going to come. And if we are in a position to build the guards very in advance, perhaps we will be able to face in a different manner in this kind of, in a well-guarded manner. And for that, as I said earlier, the market intelligence, artificial intelligence, those can be pressed into use.
Yes, very true. Thank you very much. We have 4 o'clock mark, and thank you very much for a very, very informative session that we have had today. Participants, I'm sure you have enjoyed discussing with and hearing Mr. Kharat. Some of the things that he talked about from the growth imperatives of banks, I just want to summarize for you, is in terms of adopting technology, in terms of risk aversion, not getting too risk averse because times are different. So you've got to be a little more aggressive on that. Predictability, that means forecast should come. Sectoral vigilance to build guards. I think that's a very key takeaway. So that we don't end up in this kind of a problem. And anticipating technologies, anticipating a problem and thinking of a technology which will take care of the future things in case such kind of pandemic or black swan or whatever disruption that can come. I think very well said, Mr. Kharat. Thank you very much for coming over, spending your time with us, precious time with us, sir. Thank you very much. And ladies and gentlemen, please join me in thanking Mr. Kharat, and have a great evening, sir, ahead of you. Thank you.
Thank you so much, Mr. KK. It was my
thank you.
personal pleasure also to come again on your platform and talk, because bankers always like to talk about the banking issues, banking subjects. There are various forums for us to actually express, but these kind of forums where it is the learning sessions are there. I think these are actually reaching, and particularly you are taking on all kind of medias. You are on the Facebook, you are on the YouTube, so it will reach to a larger society what we have expressed our. So thank you very much once again for inviting me and giving this me opportunity to
Absolutely. Yeah.
express myself.
Thank you.
So much.
Thank you. So thank you. It's a privilege to have you, sir. Thank you, participants. Please subscribe to our YouTube channel, Payment and Services Private Limited videos, and gather a lot more information. If you have missed out something, if you have heard about it, you want to rehear it again and again, you can have a look at them. Don't forget to give us a thumbs up, a like on the. With these few words, I session, and I'm winding up this week's session on the business and banking dialogue. Look forward to seeing you all in the next edition starting from Monday. Thank you, and a good evening to all of you. Bye-bye.